Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm Samantha Voon and with me is my co-host Brian Fernandez. Now let's start by taking a look at the summary of market actions today. Now, Asian stock mostly declined as investors weighed cautious remarks from the BOJ and mixed inflation data from Japan. Investors' attention is also shifted to today's upcoming speech by the US Fed Chair Jerome Powell. Now, his speech comes amid growing speculations that the Fed might cut interest rates in September. However, signs of a cooling labor market also spark worries about the potential slowdown in the US economy, dampening risk appetite this week. In Asian trading hours, US stock index futures saw small gains, and regional markets followed a weak lead from Wall Street, where the rising treasury yields and the sharp sell-off in tech shares led to substantial losses overnight. Over in Japan, the Nikkei 225 is up 0.47%, and the BOJ Governor Ueda stated during a parliamentary hearing that interest rates were still very low and indeed can use further hikes to reach its neutral levels. He also reiterated that the BOJ would continue raising rates if inflation remains steady. However, Ueda comments were somewhat overshadowed by the mixed inflation data for July, where the core and headline CPI inflation increased due to stronger consumer spending and higher wages underlying inflation. Now, Japanese market had been shaken earlier in August by the BOJ's hawkish stance, but managed to recover most of last week's losses. Brian, over to you for the rest of the updates.
Now, thanks, Sam. Now, Asian markets remain weak. The tech sector is particularly tracking Wall Street losses. Broader Asian markets also edged lower and appeared to on track for a lackluster weekly performance as early August rebounds lost momentum. Now, technology-heavy indexes were hit the hardest, mirroring losses in the US tech shares. Now, caution ahead for next week's earnings reports from NVIDIA added to the pressure. Now, South Korea's Kospi dropped 0.04%, while Hong Kong's Hang Seng Index fell 0.19%. Now, this is due to declines in major Chinese internet stocks. Now, Chinese stocks hover near six-month lows, with the Shanghai Composite Index trading in a narrow range today. Now, ASX 200 slipped 0.15%, while futures for India's Nifty 50 is up 0.04%. And that's it for our today's market updates. Now, to give us insights into markets and to use his crystal ball a little bit, we've got Kay Van-Petersen, the principal at Ascent Capital, Final Upgrade, and the HODL Group. Kay, welcome to the show.
Awesome to be on, folks. Happy Friday.
Now, Kay, we're not going to ask you about Jackson Hole because I think that's been beaten to death in media throughout the week. But instead, let's go through different asset classes based on your view that we are embarking on a weaker US dollar regime and lower rates for at least the next 12 months, but that really could stretch to even perhaps 36 months. Now, let's start by your thoughts on equities.
Yeah, sure. So again, the thesis here is after Jackson Hole is done, September 18th, that we're going to be embarking on a cutting cycle, which potentially should put us into tailwinds of a weaker dollar to the rest of the world, as well as lower rates, so on and so forth. And we can circle back, right, on implications on that and whoever gets into kind of the White House. So the question is, from a macro perspective, longer term, what does that mean from across assets? So moving on to equities, and we can bring up the chart, which is going to be showing weekly charts. And here we have kind of the S&P. And you're right, Brian and Sam, we did have a pullback yesterday, pretty heavy. You could see stuff like, Tesla down close to 6%, NVIDIA kind of close to 4%. But at the end of the day on this weekly chart, to me, it's still a bullish chart. We, of course, have to wait and see how this week closes and so on. But I think the main consensus was there'd be a lot of uncertainty into the elections of November 5th, floating back and forth between, Trump and the Harris camp. but the market continues to melt up. We had a correction. We seem to bounce very, very rapidly off of it. So I think that melt up kind of continues. And regardless of who inherits the White House, the spending is not going to stop, because if they stop the spending, then that is a certified, guaranteed hard recession. So for me, it's interesting to see some of the tech kind of come back. I think, in regards to more sector specific of what you're playing, at least on the US side, is going to be a very big difference between whether it's Trump or Harris. But one thing that is interesting, Brian and Sam, is the likes of Google. Some of these big tech names, I think, are not going to escape either party in the White House just because of their kind of monopolistic nature. So that's something to also keep in mind as we kind of go into kind of this new regime as a whole.
So, Kay, I want to stop you here.
Oh,
You really
sure.
think that the threat that Google could be broken up is actually very real, or it's not just saber rattling?
I mean, listen, it's a good point. We've heard it for so long, right? This is like the clearest monopoly in the world that everyone knows is a monopoly, yet no one has done anything about it. They have probably, you could argue, 3 distinct monopolies: video from YouTube, search market, where it's estimated that they have plus 90%. There's estimates of them paying 20 billion to Apple, 15 billion to kind of Samsung as a whole. So it's a question of why is it taking kind of so long as a whole. And this, I think, is one of the few things that has support on both sides. And especially after the elections, as we all know, there's going to be a lot of noise in regards to biasness, a lot of noise in regards to kind of AI use and everything like that. So I'd expect quite a bit of structural headwinds, at least on that specific big tech name.
Mm-hmm. All right. So, Kay, I also want to ask you about the situation with the currencies. Maybe you can give us a view, your view on what's going to happen and what we can expect moving forward.
Yeah, well, if we're here to make bold predictions, let's at least make them nice and big. So if we're going to get them wrong, we're going to get them wrong bigly. If you bring back up the chart, this here's the DXY. And this, again, is the weekly, and you can see pretty much until April of 2022, we've been kind of in the same range, roughly 108 to, let's say, 100. And what's interesting is we're moving towards the bottom end of the range. And if you actually move back, you could see the significance kind of this for, potentially a much, much weaker dollar for the globe. Generally speaking, a weaker dollar is bullish. It's more loosening for the rest of the world in regards to kind of growing. It's less of a tightening kind of function. And it also tends to have tailwinds for the commodities as a whole. I think what's interesting for me is, yes, as we talked about, there's a lot of monetary policies that are on the cutting side, similar to the Fed, right? We know the skew's kind of there. But what I really like is stuff like the RBA and, let's say, the Aussie, for instance, because here I think you have a bank that's more hawkish than the Fed. They have stickier inflation, and they potentially have a much stronger economy, and they also have a better balance sheet than the US as well, right? So I kind of like that divergent monetary policy. Naturally, the Aussie tends to also do well if commodities are doing well, which should be a tailwind in the weaker kind of dollar. So that's kind of the key takeaways that I kind of feel on the currency side of things. And EMFX generally should do good, especially if they're exporters and they have like heavy commodity skew.
Mm-hmm. Oh, okay. So apart from that, I also want to ask you about crypto. Crypto has just been up and down. It's like a girl making decisions. It just can't make up its decision whether it wants to go up or down. Can you let us know what is your view on the crypto volatility?
Yeah.
Right now?
Yeah. So I think crypto to me seems very similar to where we were in October last year, where there was a big move up. Equities continued to break out higher. Every day, every week was all-time new highs, and crypto was basically doing nothing. We kind of feel the same. As you see this like year story, first quarter, basically crypto went up from, call it tail end of August, early September to end of March, lower left, upper right, without pretty much a pause. And it's been a chop fest for most of second quarter, and also a little bit going into kind of the third quarter, despite so many kind of positive kind of triggers as a whole. So it continues to lag. There is no way that crypto will rally without US equities and I think tech names rally. Like I feel very strongly about that. Macro is now really what's driving crypto as a whole. So I think it's more really the convexity kind of building in. But again, it's like everything. If you get Bitcoin right, you're going to get 80% of the crypto moves. We need to go back, take out the 73, 74K highs and just have more consistent follow throughs rather than this kind of, 3 steps forward, maybe 4 steps back as a whole. It's getting a lot more active, but, we have to wait and see how September plays out.
Mm-hmm. All right. And in September, we also have the token 2049 happening. Yeah. So I think that would also help spark some flares
Potentially. I'll be there rallying the flag at the very least. So we'll see how that plays out.
All right. Lovely. Yeah. All right. So thank you, Kay. Thank you for being on the show today.
Pleasure to be on. You guys have a great Friday, great weekend.
Thank you. So we have been speaking to Kay Van-Petersen, Principal at Ascent Capital, Final Upgrade, and the HODL Group. This has been BizTech Asian Midday Market Watch. I'm Samantha Voon.
And I'm Brian Fernandez.
And be sure to keep informed on the latest market updates weekdays at 1 p.m. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.